Hello and welcome to episode 3 of Smaulgld Subscribers Sound Off series. Today we have with us Erik from Viking Analytics, and he's joining us for the first time. And Erik, how long have you been a Smaulgld subscriber?
Well, Lewis, I just signed up the other day, but I've been following you on Twitter for at least a year. Appreciate your input, and you and I have corresponded on Twitter, and I've again appreciated the insight you bring, and glad we have a friendship.
Oh, great to have you along. Now, before we get started, can you just give us some of your own background? Professionally as to how long you've been following the financial markets and in what capacity, and also how that ties into your interest in gold and silver.
So, Lewis, I've been basically involved in commodities and energy for over 25 years. I spent most of my career, like I said, in energy business. I was in the power business for about 10 years, and then the fuel business for the last 15. Um, and my career was basically as a financial analyst, and it started that way. And developing power projects in the U.S. and abroad. I've been to Mexico 50 times, and 10 other countries in Latin America, and working with international clients to develop heavy fuel oil power plants and natural gas fired power plants. And then the last 10 years, after the power business, I moved into renewable fuels and was a lead partner to develop a small renewable fuels project a biodiesel project that we we grew and expanded, and then we turned up. The business eventually evolved into something where we were recycling cooking oil from 5,000 restaurants all up and down the East Coast. So anyway, so that has nothing to do with gold and silver. But
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 before we bring it into gold and silver, because
yeah.
that background's very interesting. When you analyzed projects, I'd imagine you looked at things like supply, demand, profit, loss, cost, expenses. Is that correct?
Exactly. And Lewis, you and I have talked enough to know that I describe myself as a recovering fundamentalist, because for all these projects, you have to look at cash flow, you have to look at EBITDA, you have to look at revenue and profit. And one thing that ultimately discouraged me when I started my career more into the financial markets was these markets really don't care. I mean, EBITDA, what does that mean? I mean, I just heard that Dick's Sporting Goods just had to restate their earnings because someone couldn't calculate EBITDA. And you and I have discussed, Tesla and other unicorns that really have no semblance to reality. So it was a hard lesson for me. It was a hard year for me when I entered the financial markets, focused on the fundamentals, believing that the fundamentals mattered.
Right.
And that actually was kind of the beginning. This was after exiting the renewable fuels business, beginning of my path to understanding sound money principles and gold, silver, and things like that.
Right. So how long can ignoring fundamentals in markets last?
Well, obviously that's a theoretical question. I mean, I
No,
just published
I want a date, Erik.
I just published an article this morning, on Seeking Alpha about and its headline, the title is QQQ a value stock? In other words, is the Nasdaq 100 a value stock? Because what has happened over the last 3 months is that the volatility of the Nasdaq 100 has been less than 7%. And Nasdaq has a dividend yield of over 1%, so it's behaving like a value stock. Is it a value stock? I don't think it is, but that's the way it's behaving in the markets. And then I took a look back to 2000 when the bubble finally popped in the Nasdaq back then, and what we have now, it looks like a melt up, which is well off the highs. So I'm not saying, again, I've learned the hard way not to try to pick a top in these markets, and they could go on and on. I mean, the Nasdaq at 6,000 could go to 8,000, and because again, if the central banks can print unlimited fiat currency to buy stocks,
Hmm.
right? What's going to stop it?
So
So that's
basically, what most people say, however, is that eventually markets wrest control from intervention. And my question for you is, can markets actually be controlled by intervention such that natural market forces don't have a chance?
You'll have to repeat that one, Lewis. I'm sorry.
Okay, so what most people tend to believe is that you can't trick markets very long, that interventions only temporarily wrest control from the market. But my question is, can the interventions be so great and the manipulation so extreme that they actually can wrest control from the markets? And if they want the stock prices to go up, they can create the environment, they can print the cash, they can short certain things, they can do whatever, they can use their tools of intervention to actually overwhelm the market. Is that possible? I mean, it seems to be so far, but and people think, well, that can't last. But the question is, can it?
Yeah, and I think that those of us, you and me, that believe in fundamentals, fundamentally, right?
Hmm.
Recognize that the markets aren't driven by fundamentals. We've probably been caught trying to pick these tops, and 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 lost money from it.
Sure.
So um, I think you answered your own question, and I would say that there is no limit. I mean, someone posted the other day that the central banks of the world, and you can look this up, anyone can look this up, have printed $4.2 trillion in the
Hmm.
first 4 months of the year to buy stocks. And then someone pointed to the total balance sheet of the central banks being $18 trillion.
Hmm.
And my comment was, why not 20 trillion?
Right. Right.
Why not 30 trillion? What's the difference? It literally makes, and really the only way that it can end is when enough people realize that the value of those fiat currencies aren't worth the paper they're printed on. It's kind of a complicated.
Sure.
Um,
Sure. But now, if you look at fiat currencies, this is the first time ever in history where all the currencies are fiat. So the ones that they have to keep down are the ones like gold and silver, because you can't print inordinate amounts of those. You can't solve your problems. Uh, Gold and silver are limited in supply, and yet it seems to be a feature or a positive of fiat currencies in that if there's a credit issue, and they can just issue more credit. If there's a valuation issue, they can just buy more of the shares. And of course, it has to end at some point. But where do you bring gold and silver into this? And where do you make the case for gold and silver against this backdrop of massive intervention on a scale we've never seen before?
yeah, so I think what I've come to, and you've been in this longer than me, Lewis, but what I've come to is that anyone who's taken this red pill and believes that gold and silver are money, and that fiat and currency aren't money but are currently treated that way, the only way to survive and keep your sanity
Hmm.
is to hold the physical form of the metal. Whether it's through, like what I tend to do is to buy Sprott, PSLV, and P and Fizz, in my retirement accounts, because I think they're safer than GLD and SLV. But to hold the physical form of the metal and just wait patiently. Um,
Let me read you something, Eric, from a cable in December of 1974, just before the United States re-allowed American citizens to hold gold. This is what it says. The belief that this is when they were setting up the futures markets for the first time in
yeah.
gold. The belief that the futures markets would be of significant proportion, that physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market In turn, this volatile price movement would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. Did they achieve their and also this is the futures markets. This is pre-gold ETFs. Have they achieved the kind of taking the shine off of gold? I read the other day that two-thirds of quote gold investments are done through ETFs. Is there something where actually holding the physical metal has become a disadvantage in today's financial world?
Yeah, holding the physical metal is always going to be an advantage because you just don't know when this system might reset. I'm familiar with that quote. It was referenced. The TF Metals report had published it, and I had actually included in an article that I wrote about. I was trying to introduce. I'm on the Seeking Alpha website, as you know, and growing a reader base there, and I tried to categorize that basically as if you think about what the COMEX is doing, it's actually a lot like Rumpelstiltskin. In fact, Rumpelstiltskin is actually the perfect analogy. Rumpelstiltskin will take straw and turn it into gold. And that's what, quite frankly, the COMEX dealers do every single day. They take paper and they turn it into gold. And they sell that gold into the market to suppress the price. And so I try to introduce that concept, on the Seeking Alpha forum in kind of a gentle way. And certainly that topic is treated, a lot more directly on other websites. But yeah, I think that in 1974 when they crafted this mandate, they certainly have accomplished their objective because now, even on CNBC, it's like, well, I'm going to allocate, a certain portion to safe havens, and I'm going to, again, gold is a commodity to them. But and that's what I think your subscribers are increasingly understanding is that gold isn't merely a commodity. Gold is actually money.
Mm-hmm.
And if it is money,
Well, there's no reason for there to be a futures exchange in this capacity. The reason they had futures exchanges in the past for other commodities were where people could hedge their need to have wheat or whatever the commodity was. That's why there wasn't a gold and silver futures exchange, because it didn't fit into your hedging strategy. There was no need to do it. You mentioned, I'll give you a fairy tale too. You had Rumpelstiltskin. You can have the Emperor's New Clothes, where people are actually trading on COMEX, the gold and silver futures, for gold that they don't have. They are selling gold that they don't have to people who don't want to take delivery of it. And someone objectively looking at it, like the child in the Emperor's New Clothes would say,
yeah.
Mom, there's no gold or silver trading here. And they said,
Yeah.
oh, no, there is. It's complicated financial transactions, futures, derivatives, all the big words. And the kid's saying, no, really, they're not really trading. There is no gold there. And that's the shame of it, is that this has gone on since 1974, and they have effectively used it to kind of keep the prices of gold and silver down. And the $64,000 question we come back to, Eric, is how long?
Well, yeah.
When does this break, and does it break in silver, or does it break in gold? Do you see how one might break before the other?
Yeah, and Lewis, that I haven't been a sound money advocate for as long as you, and for as long as a lot of others. And so, one of the things I think that you look at the 1974 quote, basically the essence of it is to let's keep smashing sentiment as long as we can to break the will of the buyers. That's essentially what they're saying.
Mm-hmm.
And the poor, I could say the poor holders of gold and silver since 2011, they've been decimated. They've been absolutely decimated. And so I feel for them because I've lived it, only, for a year or so. But, and the raids on silver and gold and, $4 billion worth of ounces dumped, on the COMEX at 5 a.m. or whatever. lived some of that, but
Well,
um,
didn't you tell me the other day you were quoting the cliche about "Don't fight the Fed"?
yeah,
I mean, in a sense, haven't we been through now the last 8 years? What the Fed wanted, what the government wanted, was
yeah.
for people to buy stocks and home prices to go up to create a wealth effect. And
I mean, there's no question.
if you
Yeah,
did that though, you were rewarded. In other words, if you played along and you didn't say this is a bubble and you didn't say this is a Ponzi scheme,
yeah.
you made out.
There's no question that buying gold and silver is the ultimate fighting the Fed.
Yes.
Anyone who denies that isn't seeing reality, right? And so it is the ultimate fighting the Fed. Look, there's an unbelievably good article published by Ronan Manley from Bullion Star. You have to
Oh,
post it to
he's
your.
good. Yes.
No, but he went through all these archived documents from the 70s and the 80s. He just published this yesterday, I believe, and it's unbelievable. Notes and memos and everything, and Volcker's notes, and literally the planning of the central banks of the world to suppress the gold price in order to enhance their paper derivative scheme. And so there's no question that buying gold and silver is the ultimate fighting the Fed. And if someone can't stomach that, if someone can't stomach the losses that are going to come, like today was, you and I both had other things that are more important than the markets, but what happened today, we rallied like crazy, and then we sold off, and the yen was down. I'm not kidding, 2.5% at one point, and gold was up and gold is doing well today. The miners aren't doing as well, but in any event, your question and my point is that buying gold and silver really is the ultimate fighting the Fed, and the only way to weather the storm is to have a long-term view.
And do you think you eventually can beat the Fed by holding precious metals?
It's kind of like gravity. It's kind of like natural laws. If you believe, again, if a person does not believe that gold is money, they shouldn't buy it. Really.
Right. I mean, what they can do is they can buy GLD and get price exposure because they think it might go up for a couple of weeks and they can move in and out. But
Sure.
that's not the same as. But what do you see as the significant differences? Because there's a lot of talk in the community about the gold silver ratio, why one metal is worth more than the other. And today we saw a very big divergence. We saw the gold price rise significantly, and silver ended the day flat. That to me tells me, and I want to get your thoughts, that for me, the go to metal in a crisis is not silver, it's gold. Silver plays catch up, but this is just one day's trading. Where do you see and what significance do you place on the gold silver ratio at the moment?
I know you publish information on this, and before we get too far, I want to give you a serious plug because
It's my show. Go ahead.
if I lose track of the first question, let me bring it back to it. But again, I'm fairly new to this, but I'm a fundamentalist. I'm a financial analyst. I analyze volatilities and correlations, and and as a result, the only chart I care about now is the yen, for reasons we can talk about later. But and your readers and your subscribers may already know. But anyway, you've been a really Lewis. You've been a real steadying voice, in this world of, because I think you believe as I do that gold is money, but you also didn't check your brain at the door, and that there are traps. There are traps that you can fall into when you start believing that gold is money. You can fall into certain traps, and you want to protect your subscribers from that. I appreciate that a lot. I mean, you seriously, as I embarked on this journey, the tweets you'd post and the interactions we'd have made me realize, okay, I need to scale back. I need to settle down, right?
Well, I think thank
Yeah,
you, Eric. I think what's happening is that people are downplaying and overinflating their sense of their own positions. And what I try to do is, sure, the reason we have the position in gold is we believe in it, but I think it's a disservice to then downplay. When they say, "Oh, the central banks are losing control," and I'm like, "You got to be kidding me! What control are they losing?" And the reason that people say that is because they want them to lose control. So it's kind of that wishful thinking. But you raised something. You didn't answer the question on the gold silver ratio. We'll come back to
So,
that. No, no, no. But hold on, hold on. But you have been following two things that I've been following in your work are the yen ratio to the dollar, and then also you've been following the gold ETF. So could you give our listeners, because it is a very important point about the dollar yen ratio and then how that impacts gold, can you give us a snapshot of what happens there, and then I'll give you the floor to continue to talk about your views on gold ETFs, mining shares, and gold. Go ahead.
yeah. Well, quickly on the gold silver ratio, I think it's important, and I think the things you publish about it, I think it's good information, for a long-term view. On a short-term trading view, I would never personally buy or sell anything on the gold silver ratio because, as you mentioned, I mean, in times of crisis, you look at the early 2016, the gold silver ratio went to 83 or something like that, and it can go there again tomorrow, right? I mean, there's no
Made significant way towards there today.
because gold is, because gold is held by central banks still, and silver isn't. So gold is actually still considered money by the central banks, and silver isn't.
Correct.
And so
Silver's
that,
been demonetized. Silver has
so
been demonetized. Yes.
I would never recommend anyone trade anything, gold or silver, based on the gold silver ratio because it can, again, it can change. Will it be lowered in the future? I don't know. Probably. I can't say when.
Some people insist that that's the case. Okay.
Yeah.
Well, let's talk about the yen ratio.
Yeah, the yen. Unfortunately, what we know about, and this is kind of complicated. I've studied it a little bit. I didn't understand why. Why is the yen so correlated to the price of gold? And okay, wait a second. Japan has like 350% of GDP is debt, so they're more indebted than the United States.
Right.
So why is the yen considered a safe haven? Well, some people say, well, okay, the yen, the debt of Japan is held mostly by citizens, and the citizens aren't going to screw the government of Japan, and so we can be confident that if we buy yen, that it'll okay, and maybe that's true.
Okay.
But what we do know, again. So being a fundamentalist, what do we know? What do we know? What we do know is that the Bank of Japan buys stocks and bonds hand over fist.
Yep.
That is their policy. It's their stated policy for Japanese securities. There's an allegation, unsubstantiated, but seems to correlate with the data, that the Bank of Japan buys U.S. stocks too.
By the way, I do check that, and I wasn't able to find anything. I found the Swiss National Bank, but they can apply for confidential treatment, so you would never know what shares they buy. So I suspect they probably do as well.
Yeah. So we don't know. You and I won't understand the mechanisms of why gold and the yen and Standard & Poor's index have such tight correlation. We can just look at the data and say, wow, whenever the yen goes down, gold goes up. Whenever the yen goes down, the stocks go down.
And you've done charts, as has heard Ferguson, that show it's almost to the T. You can just look at the charts and they just correlate exactly.
Yeah, I calculate the correlations. They aren't as tight. The correlations aren't 100%. The correlations are more like I could. Again, I just calculate them today. They're more like 50 to 70% on a daily basis.
Okay, but on a long-term basis, they look pretty tight, don't they?
But what the market seems to think is happening, and people that I follow and respect seem to think is happening, is that there's certain inflection points in the yen where the Bank of Japan will intervene to support the yen, and then for whatever reason, those are the occasions. It could be a carry trade, it could be an algo-driven purchase or whatever, but yen spikes correlate to gold spikes pretty well. And again, it's a complicated thing, and I don't expect all your listeners to understand this, but the point is that what's talked about in the CNBC forums is, oh, yeah, the yen's a safe haven, and the dollar's a safe haven. Okay, I'd rather have gold.
No, I agree. It's unfathomable to me that a country that has 20 trillion in debt is a safe haven dollar. But I get that because it's the world reserve currency. The U.S. has the biggest military. But I can't see that translating into yen. I mean, that's the Japanese economy, as you say, debt to GDP, a ridiculous number. Bank of Japan buying all of those bonds. The economy is nothing. I mean, it's just flat. And moving on to gold ETFs. A lot of people at the beginning of 2016 and the beginning of 2017 made a lot of money and then probably lost it all investing in these three-time gold ETF mining shares like
Yeah.
NUGT and JNUG. What's your opinion of those trading vehicles?
Yeah, I guess you read my article.
Oh,
Thank you.
absolutely. I didn't just come out of thin air. You got to know who your guest is, Eric.
Yeah, yeah, I appreciate that. So it was published on the Sprott Money website, and then also on Seeking Alpha. I really liken the purchasing of these triple leverage ETFs. Honestly, it's better for the investor to play blackjack. Really, I believe that because I believe the odds are better, and the odds, I think, a successful blackjack hand. Lewis, you're probably a good blackjack player. It's like 45 to 47% if you know
Sure.
what you need to do with every hand.
If you can kind of count without getting caught, sure.
Well, even if you don't count, if you just know that I need to double at this
Right.
point, I need to take a hit at this point, I need to push at this point, whatever.
Blackjack is not really gambling.
Well, it is in the
It
sense
is,
that,
but what you're saying is that investing in these ETFs is far more gambling.
well, but again, if it's 47%, the house is going to win, and
Right.
they're comfortable, especially if they give you free drinks. Yeah, they're comfortable, letting you sit at the table and throw up $100 chips.
Right, but the game doesn't change. There's a constant in blackjack. But from what you've pointed out
Yeah,
with this GDX, they can change the shares that they have in there. Just recently, they came out with this thing where they had too many shares. They for the prospectus didn't allow it, so they had to sell shares. Now that doesn't make sense. The reason there's all these shares coming in because there's demand for it, but they have to sell them, so the price of their ETF goes down because it doesn't fit their prospectus.
yeah. I think the most helpful thing for your listeners would be this, and again, it's unsubstantiated, but I believe it's true, and that is this. If you day trade anything, and you have a discount broker, and you say you put a buy in for JNUG or even Apple stock, it doesn't matter.
Hmm.
I'll buy it at 100, and I'll put a stop loss in at 95. Your discount broker sells your stop loss information to the dark pools.
Mm.
They know it's there,
So they
and
know.
so they will go, and they have all of this in their computer. And so you wonder why there's these spikes in different securities up or down. It's because the dark pools and the market makers know exactly where the stop losses are, and they wait for them to pile up, and then they go attack them. So that's the most important thing to understand. If anyone's trading JNUG or a nugget, that the dark pools can see your stop loss orders. Now, I would say that's for day trading, and we can expand on that in a minute. But on a bigger level, if someone's buying and holding these securities, there's time decay that is undeniable and that
Right.
is easily verifiable, and that I've covered in some articles. But it's basically anyone who holds Nugget or JNUG longer than a day, again, better to play blackjack.
And also, I found that the there's not even a correlation anymore between the price of the metals and the price of these ETF mining shares. Someone did a chart, it might have been you, that showed that when the gold price was X, J and the different ETFs were at certain prices, and then when gold went back to that level, the mining share ETF did not go to that level, and so it really seems like you say a crapshoot because I don't even know how you value those things.
I think they're fundamentally correlated just because, right now, if the if the average mining cost is $1,000, right? And we wouldn't get all that. I still think they're correlated, but they diverge all the time. And so if anyone's trading JNUG, which is so here's the basic math historically is that JNUG, the GDX, for example, might be three times GLD, right? Which would mean that Nugget, the triple leverage ETF of GDX, would be nine times gold, right? So if gold goes up 1%, you expect GDX to go up 3% and JNUG to go up 9%.
Right.
But if anyone's trading that on a daily basis, expecting those ratios to hold, they're kidding themselves.
Right. That's my point.
Yeah,
But
yeah.
like you say though, they're meant for day trading only. So how do you even figure out what day to buy it on where you might get something that closely correlates? Because holding it, as you say, the value of that thing erodes.
No doubt, and yeah, and what I've noticed the last several days is that the market for gold and silver tends to rally in the off hours,
Right.
and guess what?
When those shares are not trading, the GDX and
Yeah,
the
it tends to rally in the off hours. Guess why? It's because they want to sell Asians gold, physical gold at a higher price. That's what I think.
oh
I mean, that's what I would do. Isn't that what you do, Lewis? I mean,
absolutely. This whole thing, you're highlighting that when people
yeah,
complain about manipulation,
yeah.
they think that it's only in gold, but we know. Well, we know that the markets are manipulated across the board in order to get a result, and that really makes it difficult for the average person to get into the market to make sound decisions. And basically, if you had just flipped on the Nasdaq, bought a mutual fund that tracked the Nasdaq or any of these indexes, and just forgot about it, didn't read any financial news, didn't follow what was going on, and that's kind of what they want. They want you to be asleep at the switch. They want you to buy stocks, as they say, and they want you to follow along what they want. To believe that negative interest rates are good, money printing QE is the new normal, and had if you didn't have a brain, like you say, if you just checked your brain at the door, you might be wealthier today.
I mean, yeah. I mean, I'll tell you what, Lewis. My wife's IRAs are are in these buy and hold funds. Man, she's kicked my butt.
Right. And you're the guy who follows this. Your wife's not paying attention. Eric, it's been a delight having you. I think we'll have many more conversations, shaking our heads about this weird financial system. But I've come to the conclusion, I'm a final word from you, but I've come to the conclusion that maybe one should keep a toe in the other water, just as a hedge against our kind of sound money, gold bug, silver bug beliefs. What do you think?
I mean, if anyone has whatever amount of assets someone has, 5% of someone's assets in a physical form in silver, I would choose silver or me. I mean, it's just an insurance policy.
Sure. Well,
Yeah.
what I'm saying is there are some people who have sworn off of anything to do with this financial system. They call it a Ponzi scheme and so on. What I'm suggesting is, however, that that system, there's a vested interest by so many people with so much money to make sure that it works that maybe you should have a toe in that water as well as having your precious metals.
Yeah, I think if things weren't as overvalued as they are now, I would agree. I
Well,
just
but you could have said that last year, 2 years. That's why I look at it too. Every year I look at it and I say, oh, not now. It's too overvalued, and it just keeps going up. All right. Well, Eric, thank
well,
you very much indeed for joining us, and we'll talk to you next time.
all right. Take care.
Thank you very much.